Simply going to get a better deal using a broker. Every time we pick up the phone to the bank, they know that we're a big client. They know that if they don't pull their socks up and give us a good deal, they're going to miss out on it.
Using a broker gives people options from the outset. If you're dealing with one bank, you've got one choice.
As you mentioned earlier, it's not just choosing the right bank, it's the right person within the bank.
And that's where having a mortgage broker, which is independent to what's actually happening with the banks inherently, that real value is driven from.
75% of all home loans now are written by a finance broker. That transition's happening in the commercial space as well. People are going to use finance brokers because they're not going to be able to get what they need from the banks.
Welcome to RB Radio. I'm Frank.
And I'm Trudy. Join us as we explore the very exciting world of the accommodation industry.
We're going to walk you through the ever-evolving landscape of hotels, motels, caravan parks and management rights, but more importantly, the communities and the stories that underpin them all.
From market trends and expert predictions to the personal success stories and many lessons learned, we're going to cover it all.
Join us and let's embark on this journey through the weird and wonderful world of the accommodation industry together. Welcome to RB Radio. I'm your host, Frank Matus. Normally I'd be joined once again by Trudy, our Managing Director at Resort Brokers, but since we liked him so much, instead we've got Alex Cook, Director of Resort Brokers, joining us as co-host again. Welcome, Alex.
Thank you. Can't get rid of me this morning.
Can't get rid of you. Thank you for joining us again. We've got some special guests here this morning. We've got the team from Mike Phipps Finance. Mike has sent his chief representatives here. We've got Paul Grant, who looks after sort of the northern side of southeast Queensland.
Yeah, and for motels, rest
Bit
of the
of
country,
everything.
yeah, all over the place.
Management rights and hotels and everything.
Motels, Quest apartments, caravan parks, yeah, the whole lot.
Oh, well, welcome, Paul. Thank you for coming
Thanks,
down from the coast for us. And Cameron Wicking, also from Mike Phipps Finance. Thank you very much for joining us.
G'day, mate. How are you?
You look after Brisbane and the Gold Coast. Is that kind of your area?
Yep, and like Paul, motels, caravan parks, right across Australia.
Okay, fantastic. And thank you for Mike, who's given you guys the reins to come and talk to us today. So thank you for joining us on RB Radio.
Thanks for having us.
Well, look, it's kind of a special year for you guys. It's 15 years as a financial broker and also within the accommodation industry. So I guess happy birthday.
Thank you very much,
Thank you,
mate. Yeah, Mike set up the business 15 years ago in his back bedroom, so...
And you guys are still working in Mike's back bedroom now? Or?
No, I'm not.
Right. And so tell us a little bit about your business. You touched on it a second ago. You specialise in the accommodation industry, but you're a little broader than that as well, aren't you?
Yeah, correct, mate. Yeah, so our niche is a bit like you guys, mate. Anything accommodation related, but we're ex-bankers, ex-accountants. We can do any sort of finance. In fact, we've just set up our own home loan division as well. So
fantastic.
Fully scoped up to do anything.
Shout out to Taylor, looking after Taylor, the home loan specialist.
Doing a cracking job.
Tell us a little bit about the benefit of using a finance broker, because everyone's got a bank and there's probably been some traditional ideas over using a broker to do finance, thinking that a direct relationship could be more efficient. Explain why people would come to you on a commercial sense. So from that accommodation industry perspective, why would people come to you guys?
Well, I suppose using a broker gives people options from the outset. If you're dealing with one bank, you've got one choice, one operator, and not necessarily the right operator in the finance side of it. So by using a broker, you really have access to the people that know what they're talking about in each of the banks and getting a comparison across all of the banks that are operating in that. So each bank has their own unique flavour to what they deal with. So a transaction might work well for one and not another. And if you're not dealing with a broker, you probably could run into that issue of, dealing with the wrong bank from the outset.
Okay.
The big one, you're simply going to get a better deal using a broker.
Yeah.
We do so much business in this space. Every time we pick up the phone to the bank, they know that we're a big client. They know that if they don't pull their socks up and give us a good deal, they're going to miss out on it because we're going to shop around to all the lenders.
Yeah. We're getting competition.
So it's almost like the buying power of the fact that you've got not just one client, you've got the collective buying power and the relationships that you've got from a much bigger pool, I guess.
I think that's really well put.
Yeah.
As I say, mate, they can't afford not to pick up our phone call because they're going to miss a chunk of business if they do. And they know that if they don't price right, they're going to miss a chunk of business as well. So, and the other beauty is we're the advocate for the client at no cost to them. They don't. There's a misconception people pay for our services, mate. They simply don't. We'll never send a bill out. We get paid by the banks. and we still get a better deal anyway.
Alex, that's something that we focus on at Resort Brokers, which extends to the great relationship we've got with Mike Phipps Finance, is when we recommend our associates, whether it's mortgage brokers, lawyers or accountants or otherwise, we don't get any benefit from that. It's really about making sure that the right people are there to help people do the deals in the right way.
Absolutely. I mean, I suppose the benefit to us as brokers is by making sure our clients use finance brokers, the deal's a lot more likely to settle, which means we're a lot more likely to get paid our commission. But no, in regards to any direct commercial agreement, it's just a reciprocal working relationship. Yeah.
And the way the industry has moved in the last 15 years and, the revolution that sort of happens with the finance industry and then the mortgage broking side of it, commercial or otherwise, what are some of those shifts that you've seen that have happened in the last few years in your experience there? And what can you sort of predict coming out over the next short to medium term that would affect the people that are looking into these accommodation assets?
Well, the recent stats in terms of home lending, and mortgage brokers started out in the home lending space, 75% of all home loans now are written by a finance broker. That transition's happening in the commercial space as well. So
that's interesting.
There's commercial specialists in pharmacies, in management rights, accommodation, in a range of areas, and I think that evolution will be that people are going to use finance brokers because they're not going to be able to get what they need from the banks. If you want a home loan now, it's really hard to walk into a bank and get a home loan because they've pivoted their model to the mortgage channel.
Yeah, okay.
I think that'll happen in the commercial space. I think if you walk into a local bank branch and say you want to borrow money for management rights, they won't know what you're talking about. 'Cause they're going to tool up to be focused on the broker sector more so than the direct sector.
These points that we talk about, Alex, sort of fit together quite nicely. It's use a specialist, but then also use a real person. You can develop a relationship with a mortgage broker or a mortgage brokerage firm that understands your business, that gives you some, confidence when going through these, what are complicated transactions, right?
Absolutely. And it's also worth bearing in mind, it's not just the buyer who's getting confidence and who's going to end up in a better situation moving forward, a better deal, better financial terms, but also sellers become a lot more comfortable. I mean, as you know, desirable assets, we quite often have more than one buyer looking at them. And as John was touching on earlier, it's really important for sellers to know their buyer. And one thing sellers will always want to know is, are they financially capable, who they're doing their finance through, and certainly particularly experienced operators who know the industry, if we're able to say, yep, this buyer is working through a brokerage like Mike Phipps Finance, they've indicated they're financially capable, that's one less thing for a seller to worry about, and it helps buyers be more presentable and more likely to be able to just secure those better, harder to acquire assets.
That whole ecosystem just runs a little bit smoother where we can all talk about, we're all involved in the deal from the beginning to the end. And so rather than having individual components and, the right hand not talking to the left, having that industry working together, swimming in the same direction is very much led by the fact that we know that the money is there when it comes to it, because it's not it should be one of the first conversations that people have, but really the reality of that conversation only gets, further down the line, doesn't it?
Correct. And I think your point's valid, mate. We think it should be the first conversation you have. If you can't afford something, why are you bothering looking at it? But to your point, finance comes last. So we need to be working and be really confident at the outset, and we pride ourselves on doing that work up front so that we can give that confidence and transaction is going to follow through if we go.
And then another thing to touch on there too is that the finance broker is there beyond the transaction itself at hand. So if that particular operator wants to then go on and acquire another asset or another business, the finance broker can act with the banks on their behalf as well. Bankers do come and go. We've seen it multiple times within every bank. So that just adds that little extra, instead of having to explain yourself to the bank every time you're trying to do something or at an annual review, that finance broker can get in there and actually help out with that.
That's an interesting point, that relationship continues well past that in one transaction, because things are always changing. People are moving, people are refinancing. That element it doesn't just end in that transaction being settled.
Spot on, mate. We're there for the life of the loan and what happens thereafter.
Yeah, good. That's good advice.
What are the touch points on a loan for a finance? I mean, how often are banks conducting reviews on managed finance clients?
That's a good question, and a bit of a bugbear of mine at the minute. Yeah. So typically, if you borrow enough money, and it'll be different thresholds at each bank, but usually it's over $1 million, they'll want to do what they call an annual review. So they'll ask you to send your financial statements in and ask you a bunch of other questions, and just a bit of a health check to see how things are going. Typically, we're lucky in this industry. Typically, we don't have ups and downs and high troughs and peaks, and so most of the time it's a tick and flick exercise. Yeah. Sadly, what's happening at the minute, and as I say, a bit of bugbear of mine, automation's starting to come in and into play with those things and annual reviews. And automation's great when it works, but it's a pain in the neck, particularly in this facet when it doesn't work.
Yeah, so it can quite sometimes pump out negative results which aren't justified, basically.
100%. So banks at the moment are doing a lot of analytics behind the scenes. People don't even know what's happening. That's happening to us all at the moment. They're analysing our spend on our credit cards. Same's happening in the commercial space, mate. They're analysing what people are doing with their accounts, and they're making assumptions based on what they're seeing there that translates into how they view the borrower. Yeah. And 9 times out of 10 it's right. It's the 1 out of 10 where they make some assumptions it's not correct, and that can impact your borrower.
And so that's what we were talking about before, is still providing that human face to an increasingly automated process.
Oh, man, I think it's integral. I've just had an example. I had to jump in to fix someone that the analytics behind the scenes weren't right. They were correct. They just painted the wrong picture. And automation meant that these people were going to pay a higher interest rate. We were able to jump in and fix that and explain why. And once you explain it to a human, the human gets it. Explain it to a machine. If we're just relying on machines for decisions with no other avenue, I think that's dangerous.
That becomes an increasingly important element of why you'd use a finance broker, is the fact that just keeping that human element at the core of the relationship, being at the core of the transaction. Well, moving on from that a little bit, asking a little bit of a broader question, the international economy, or the turmoil within the international economy at the moment, is a hot topic. How does that macroeconomic environment affect us here on the ground locally in the capacity to be doing business with banks and just doing business in general? What are your views on how that wider perspective influences us here on a local level?
Oh, well, I mean, obviously the first one that will most likely be lower interest rates. There's certainly a lot of talk in the markets at the moment trying to stimulate the economy. By doing that, the government's going to use lower interest rates or lower cash rates to try and keep the economy in Australia afloat. The banks will probably also be trying to look to free up a lot more money in being maybe a little bit more or less restrictive in regards to their credit policy to try and allow more lending out there. That will take a lot more time, but certainly on a localised front, in dealing with the banks, interest rates will be the biggest impact, and certainly that's already being talked about.
Yeah, Paul, what do you...
Maybe I'm a little naive. I don't see, at this stage anyway, that the turmoil is going to impact what we do.
Yeah.
The confidence, perhaps, and confidence is a big thing, and you know that, given the role you have. Maybe it's going to affect confidence of buyers looking at the market and just worrying about what's going on. But I think, to Cam's point, I think interest rates are going to come down. I think that's almost, it's priced in for a cut in May. Some of the economists are saying we'll get another 2 cuts this year. Provided that is balanced by keeping confidence high, I don't think we're going to see huge ramifications at our level. Outside of that, I think there'll be other things, but smarter people than I can get into that.
Yeah.
And I think if you look at things historically, I mean, it's one of the things I always like to say about the management rights industry. It is very resilient to the wider global economic conditions. I think throughout the GFC, it was one of the very few going concern businesses that maintained 65, 70% LVRs. As you know, it's been doing that for many years. We were still transacting during COVID, because ultimately the service that it provides is an essential service. People need to live in strata buildings. They need to be maintained. People who own, real estate, regardless of where the economy is at, it needs to be let out. So it's I think out of all going concern businesses, particularly within accommodation, it's arguably one of the most resilient out there, which is why lending, I presume you foresee it to continue to be relatively straightforward.
Honestly,
not straightforward, but
not straight,
available.
I just can't see any knee-jerk reactions happening in our space. And mate, your point's really valid about the resilience and the banks continuing to lend money. We talked about this business has been going for 15 years. Mike set the business up during the GFC. To go into an accommodation specialist business during the GFC, you wouldn't have done that in many other sectors.
Well, you see an element of, whilst there is thunder and lightning very, very frightening for a minute, then things cool down, and it actually, for an economy like Australia and the accommodation industry within Australia, it bands together. We're not going to the States, okay, because the foreign exchange is a bit poor. Well, then we look locally. We can't go because of COVID. We'll look locally again, and so some of those domestic industries then end up increasing in value because there are people will still want to go away. People still need to travel for work because we are in such a big continent. We don't just rely on the international transactions to keep us afloat. So whilst there is a influence and a direct impact in the short term, we really do seem to ride the waves quite well.
Who would have thought COVID would have had a positive impact on our short stay leisure market like it did? So mate, I think you're right again.
100%. One of the things that we see, whether it's influenced by the economy or otherwise, is there is some, in the Australian finance industry, that there is some changes happening with the banks. You see, the merger or the purchase of Suncorp through ANZ. What do some of these structural shifts in the banks and the banking policy that is driven by those movements, how does that affect people on the ground?
Oh, mate, for us, that purchase you reference, my preference is that we have more banks and more choice. More choice is great for us because we've got options for clients. But reality is we're going to see things like the Suncorp purchase happen. Part of that purchase is that ANZ aren't allowed to make any fundamental structural changes for 3 years. We're about a year in, 2 to go. My real hope with Suncorp, which is a great brand, and Cameron and Mike are all ex-Suncorp people, is that they keep that as a brand. It resonates here in Queensland. There's a real affinity to that brand, and we've seen CBA's purchase of Bankwest. I think Bankwest is a really strong brand. They should have kept it more prevalent than what it is. Westpac's purchase of St George and Bank of Melbourne. I think banks have erred there in terms of making things vanilla and lumping it all in. I'd love to think that Suncorp remains
some variety, some choice.
It's got its own identity. It does things a bit different. I'd really, really hope and pray that stays that way. Commercial realities probably dictate it might not.
Yes.
But at the very least, we've got another 2 years to play out before we're going to see anything wholesome or wholesale happen there.
Alex, we see it, and I'll ask Cameron afterwards, but we see when we're doing these transactions is that there's different horses for courses. You've got different banks and different environments that suit different asset classes and different people. From your experience in the management rights industry, have you seen that sort of rotate through the banks? So you see that there's one bank that you go to specifically for one particular type of transaction, or you let the mortgage brokers sort of play that out?
Absolutely. Look, I'm not going to use this as an opportunity to advertise any particular bank, but look, I suppose I would say certainly throughout my 15 years in the industry, if I look back towards the beginning, there were certain T1 banks who were at the forefront of the industry who might not be the T1 banks who are at the forefront of the industry now. And banks change their policies. I guess they have, different risk appetites, and they change and want to move their lending over. So the reason I make this point, it's all the more important to use a broker because banks' policies are continually changing, and what might have been the best bank last year might not be the best bank this year. So yes, there are absolute leaders, but it's always changing.
And in your space, you'd hear if a buyer was using a certain bank, you'd go get some confidence to that, and if it was a different bank, you might get very, very nervous.
Absolutely.
So
absolutely.
And like you say, mate, choice is a great thing for us, and choice is a great thing for clients. And the more choice, the more likelihood we're all going to get more deals done because people will have their specific niches in what they will do.
And as you mentioned earlier, it's not just choosing the right bank, it's the right person within the bank.
Correct.
And although, as we've established, management rights is a very big industry, it is a niche industry, and there's probably, how many how many experts within each bank actually understand management rights? We're probably talking 3, 4 within each
One or
bank.
two, perhaps.
One or two.
Yeah. So even a bank which is, you might hear is doing a lot of lending within the sector, if you go to the guy down the road, you might not have your file quite as well managed as if you went to a broker and went to the right person.
Cameron, with that transition of the right solution for the right client, do you see that shifting as things change, or is it something that you can rely on relatively strongly at any point, or do you have to really stay on the ball as to say, well, just because Bank A was the right thing today doesn't mean that Bank A is the right thing tomorrow?
Yeah, I agree with that 100%. I think things definitely do change over time, and you've really got to stay on it and be aware that one bank may be perfect today, and 6 months from now might be entirely the wrong bank.
And is that because of the people that are within it, or the bank policies, or why do those changes take place?
It's a combination of the both. So banks obviously have their individual policies, and they all have exceptions to those policies that they can write. The right banker in the right institution knows how to use those policies and the exceptions to them at the right times. So it's not just the right banker, but the right banker in the right institution. So it does change, very much so. And you've just got to keep following that through.
And that's where having a mortgage broker, which is independent to what's actually happening with the banks, inherently, that's kind of that real value is driven from.
To Alex's point just before, banks definitely, do change. They move their policies. They all have prudential limits that are there that they lend up to. And once they start getting close to those, they'll start pulling back. Their policies will change so that they can, move their gearing towards other sectors. And the right banker in the right institution will be aware of that and be able to continue to write the business that they need. But if that then banker moves, or if the policy changes too much, then another bank will rise up and will start taking on that portion of the industry. And you just need to be aware of it.
Fair enough. And touching back on the point that you made a minute ago, Paul, in regards to interest rates, it's been a hot topic of conversation throughout the entire country for the last couple of years. We had 13 interest rate rises, and we were hoping at the end of those, when things started to level out, and correct me if I'm wrong, Alex, we were hoping for some confidence to be back in the market as things leveled out and we saw an interest rate drop in February. You mentioned that there's potentially some other interest rate reductions on the horizon based on macroeconomic conditions. Seeing the industry through the lens that you do you see that this is going to help the industry, bring some confidence back to the industry, make some changes, see a new boom for it? How do you see that affecting the market?
On a couple of fronts, right? I think you're right. I think we'll see some cuts come. I think there've been some people that might have stood on the sidelines waiting for the cuts. We talked about it all through 2024, and it didn't happen till right at the end, start of 25. And then an election got called. And typically for us, elections mean people sit on their hands. Who knows why, because the difference is not material. But I think post the election in May, we'll get an interest rate cut. And I think that will spur on people wanting to do things, people that might have been waiting. I think that'll happen. And confidence will be restored. Well, not restored, but fulfilled, I suppose, throughout the rest of 25.
Okay, that's interesting. Cameron, do you sort of share that? Are you backing Paul in and saying that there will definitely 100% be interest rate cuts in May? Is that what we're hearing?
Jim Chalmers said it, so I'm sure Cameron.
Sure, I said 100%, mate, but anyway.
Sorry, I heard 100% interest rate cuts in May from Mike Phipps Finance.
Certainly the industry is talking about rate cuts coming.
You can go harder than that.
There's going to be some.
There'll certainly be rate cuts. Yeah.
Ultimately, there is some bigger things at play here, and the economy needs to respond in some way, shape or form. I think I'm joking about holding you guys to the 0.50 rate cut. That's very specific, but no, I'm only kidding. But the fact is that with influence that there needs to be some shifting of gears along the way, right?
I think another good way of looking at it is maybe not so much on buyer confidence, but also the appeal of assets. I think because interest rates have been quite high, certain assets have been quite hard to stack up, and I probably mean more middle income bracket management rights, particularly with more expensive real estate components. You know, with the interest rates being high, it's been hard to get them to stack up from a serviceability of debt return point of view. So I think, yes, there might be a bit more buyer confidence that'll come back into the market, but it will also just help a certain category of assets transact that might have been a bit bottlenecked over the last 6 to 12 months.
And you've seen this throughout your career, that some of these assets, and I'm talking specifically for management rights, but I imagine hotels, motels and caravan parks are in a similar space, that they transact every 5 years or so, right, Alex?
Yes. I mean, look, it depends on the more mum and dad style properties. Yeah, I'd probably an average of 3 to 5. Corporates obviously retain their stuff a lot longer, but yeah.
And so my point with that is that the cyclical nature of the economy is reflected within our industries as well.
Yeah, that's a fair point. Certainly coming out of COVID, I mean, I think that first year out of COVID, from a transactional point of view, was by far the most that we've seen in a long time. And so that we're probably coming up to 3 to 4 years on from that. So yeah, there's probably a bit of a cycle coming up.
And that all of these things fit together then as well. You know, we came out of COVID and we had a really buoyant market for a couple of years in 2022, early 2023, which had the multipliers quite high. Now with interest rates rising or have risen and then levelling out, that impact on prices has a material effect because the cost of lending is higher. Mm-hmm. So that cyclical nature, you're always chasing, you know, the industry's chasing its own tail, isn't it?
For sure. And if we take that a step further, we do a lot of partnership transactions as well. And I think Alex was sort of touching on that. The analysis on that, the first point is return on equity. And with high interest rates, with property prices having increased, with cost of labour having increased, those transactions were harder to get across the line in the last probably 18 months than they ever have been. Just to get them to stack up. I think property prices moderate a little bit, interest rates come down, and cost of living sort of starts to stabilise. They'll become more attractive transactions as well.
Yeah, okay. All of these things fit together, and with a little bit of reasonable fiscal management along the way, we can get some of these transactions moving and support the industry in a positive fashion, I hope.
Sure.
Yeah. Those lower interest rates certainly do mean a much stronger serviceability position. So a lot, as to Alex's point before, where there is that slightly lower net, or where it has been a bit harder, those will start to become a little bit more easy to get over the line with the banks.
Look, we're getting towards the end of our time, guys, but I'll throw an idea to both of you guys, if you can talk to our listening audience. What's the best advice that you can give if you are looking to get into this game, whether it's hotel, motel or management rights or caravan park? What's some of the things that you're looking for an operator if they're buying, or someone who's looking to buy into this space? What's some of the advice to get prepared so you can come to you guys with the best possible scenario to get them the best possible deal? Is there anything that they can do to prepare for that?
There's a few things, mate. The low-hanging fruit for us is obviously talk to us as soon as you can.
Yep.
We don't charge any fees, mate. So people get nervous about talking to us and wasting our time. You're not wasting our time. We want to help. We want to work out whether you can do something or you can't. If you can't, no drama. Off you go. Maybe come back when you can. Maybe come back down the track. If we determine that you can do something, getting your ducks in a row. It's a weird phrase, but who's going to run the business? Are you going to run it with your partner? Are you going to hire other people? Is one of you going to keep your job? Having a bit of a clear plan as to what you want to do.
Because the banks want to know where their money's being spent, right?
Who's running the operation?
Yeah.
Who's generating the money that's going to pay back their loan?
Because ultimately these things are, at least on the outset, they're 50, 60, 70%, that's the bank's money. And so they want to understand how these things are being run.
Biggest investor is the bank.
Yeah.
So they want to know who's going to run it, how you're going to run it, why do you want to get into this space? And then they want to see that you've got your documents in order, your tax returns are covered, you've paid any necessary bills, give us a bit of detail about who you are and your background. So it's basic sort of stuff, but it's really having your house in order, I suppose, is the best way to put it.
Before you even get, start to have these conversations, have the conversations and work with a finance broker, a specialist finance broker for your asset class, and get things prepared.
Yeah, and often our first chat is not about the numbers. Who are you? Tell me about yourself. What do you want to do this? Who are you going to work with? How's it going to happen? Then we'll get to the numbers. The numbers are easy. Tell us the plan first.
And if people want to get in touch with you guys, your details are on the Mike Phipps Finance website.
Correct. Yep. MikePhippsFinance.com.au.
And they can talk directly to you guys as well, isn't it? You guys are, an operation that you guys want to know who the people that you're working with.
Absolutely.
100%.
Yep.
Yep. We're the first point of contact, so definitely give us a call.
Good news. Alex, any further questions for the guys from Mike Phipps Finance before we wrap it up?
Look, I'll just reiterate, I've been working with Mike and subsequently these guys for 15 years, and I think as an agent, having a particular focus on encouraging new people in the industry to use a finance broker has certainly paid dividends from me. It's enabled me to work out, not just who the legitimate buyers are, but also to assist in working out where to place them. I think it just, from a buyer's point of view and as an agent's point of view, it's one of the most important relationships to have. And these guys certainly know what they're doing.
Thank you.
Yeah, 100%. I'd echo that as well. Paul, Cameron, thank you very much for joining us here on RB Radio. Come back and join us when it's your 20th anniversary as well. We'll hopefully see you before then. But once again, thank you for joining us and thank you for your time here on RB Radio.
Thanks for having us.
Thanks for having us.
Thank you, Frank.
Cheers. Thank you for joining us at RB Radio.
If you enjoyed the insights from this episode, we'd love your support with a 5-star review on Apple Podcasts and Spotify.
Stay connected with us on all social media platforms at Resort Brokers. We're excited to continue this journey with you and see you in the next episode.
See you then.